This is the Future of Finance. Hi, everyone. Welcome to the Future of Finance podcast. I'm Georges Dyer, and today I'm joined by Scott Ryan and Kathryn Hopkins of Investature. Investature is a new firm that works with organizations to help them leverage their retirement plan offerings to engage employees and attract and retain talent. They also help organizations understand and measure the carbon emissions and climate change implications of the investments in their retirement plans. This is another in a series of episodes focused on retirement plans, a space where trillions of dollars are invested and where people have a tremendous opportunity to drive positive impact. People often don't understand just how much of an impact their money has. For example, Scott points out that $1,000 in a climate investing strategy can save as much carbon as a cross-country flight every year. So a $500,000 portfolio could eliminate the equivalent of 500 cross-country flights each year. It's also an area that is often challenging to understand and to navigate. And so we talk a lot about Investature's education efforts around financial literacy and financial wellness. It's an exciting model and a great conversation, so I hope you enjoy it. Please share it with your friends and check out some of the actions that we share at the end of the episode. With that, here's Scott and Kathryn. Hey, Scott, Kathryn, how you doing?
Doing great, George. Thanks for having us today. Appreciate it.
So pleased you could join us. Yeah, great to see you both, and really excited to talk about all of your work with Investature. And Scott, why don't we just start with you as the founder and tell us a little bit about, kind of what in your career led you to start Investature?
Yeah, it's interesting. So my whole career has been in fintech, either fintech through consulting, fintech working in wealth and asset management and institutional sales and trading on Wall Street, and then fintech within Salesforce. But in my personal life, I've always been passionate about the environment above all other causes. And I've always been trying to find where it was the right time in my life to make a difference. And so in my private life, charitable life, I'm on the board of the NRDC, the board of advisors, and I've done a lot of things since like middle school age. But in my personal life, about 2 years ago, I felt like I wasn't doing enough, right? Or like my personal life wasn't enough. So how do I make my daily work life apply to it? And that's where I started searching for people for about 3 months about what could I do to be as impactful to the climate yesterday, because it needs help yesterday. And what could it be where it's something might be a little bit different, but still highly impactful to help drive change. And the area I found was around actually trying to catalyze and close the climate finance gap, which we can talk about a little bit later in more detail.
Hmm. Nice. And for those who might not know, tell us what fintech is.
Yeah, so fintech is technology focused for financial services, because when people think of financial services, they mostly think of investment banking, retail banking, wealth and asset management, but there's technology that can accelerate financial services opportunities for individuals so that they can have the wealth that financial services are meant to give them so they have more choices in life.
Hmm. Nice. And tell us, so what does Investature do? What's sort of the basic thesis, and how do you apply your experience in fintech to this climate and sustainable investing space?
Yeah, so Investiture One, the name is very like jokey from the 1990s almost. It's invest in nature, invest in the future, right? It's a very, and that's when I started working. So I stole that kind of approach to naming something. And
Nice. Love
it wasn't claimed yet. So like, great. I didn't have to pay a marketing agency to come up with the name.
it.
But we're trying to do two things. We're trying to help right now in the US market, draw the connection between financed emissions, like as part of a carbon footprint for an organization and an individual,
Hmm.
and investment choices. And then to provide technology to pull those two together within retirement plans, right? Because retirement plans are by nature long-term time horizon. A lot of climate solutions have a long-term time horizon, but also people who are thinking about long-term time horizon need to be thinking about climate solutions. But climate solutions need money now,
Hmm.
right? And so what we're trying to do is tackle a large asset pool, which in the US, it's about a $12 trillion asset pool for defined contribution plans, also known as 401ks, 403bs. Why we're targeting those versus other retirement plans like pensions or individual retirement accounts is because it also, there's motivation by the employer to make it something that's meaningful to the employee, right? Whereas a pension is a little different, not fully different, but a little different. And then all of the control of the pension is more centralized.
Hmm.
And individual retirement accounts is this straight to consumer product, where anybody today could be reading things that they've read before and take action.
Hmm.
But the decision making at an employer is determined by the employer executives as to what's offered to their employees, the technology to help them understand it. And then what we're adding is help to understand your carbon footprint of your financial choices.
Yeah, I love it. And we'll get into all that more because it's really central to a lot of the work we've been doing with colleges and universities around their 403B plans and how that ties back to some of their climate and sustainability goals. But first, Kathryn, tell us a little bit about your background, how you came to work at Investature with Scott.
Yeah, yeah, and apologies for my scratchy voice here. I have had, similar to Scott, lifelong passion for the environment. I grew up in a household that, there's no waste. I'm a proud member of the Clean Plate Club. My dad, his profession was tackling world hunger. So
Oh, wow.
I just always sort of came to life with a view of sustainability and conservation and stewardship of the environment. One of my first jobs out of college was with Nature Bridge. It used to be called the Headlands Institute, which was basically outdoor education and environmental outdoor learning essentially. And I just was very passionate about environmental education without a science background. So I took a step away. I did some research at Stanford and other places, and wore a variety of hats and have really been in the education world. So very different from the financial sector that Scott comes to. But I realized maybe a similar time that Scott did that I wasn't doing enough for the climate. That was what was keeping me up at night. And found Investature through the climate-based fellowship training, which we could talk more about, which is just great at getting folks geared up and ready to sort of tackle these climate jobs. And I really wanted to marry my passion for education and my professional expertise with fighting in the climate. And I was actually interestingly working to do some advocacy around getting better climate investing in 529 plans here in Massachusetts.
Hmm.
And so we talked about that as a strategy. And, we're not doing 529s with Investiture, but it's a similar kind of model. And there's clearly demand for this, right?
Yeah.
People want to do this and they want to take action. And there are just so many headwinds and barriers to taking action. And so I really felt like this was a great way to move the needle and jumped on board.
Nice. And tell us a little bit about your role, because Scott mentioned sort of the role of the individual as well as the institution here, and you bring that education to individuals who are interested in this and help them just understand how they can enact these types of strategies in their policy, in their plans. Is that right?
Yeah, yeah. So I'm the chief learning officer. I essentially look at the external facing education work we do. And I think it's just super important. Knowledge is power. So much anxiety and fear and emotion comes along with these financial decisions that people need to make, everything from day-to-day budgeting and banking to more complex investing, and I think New Jersey may be one of the few states that actually require high school students to take a financial literacy course in college. And so if you don't study this ever, it's never required. It's really,
Hmm.
where do you get that knowledge? Where do you get that knowledge base? Where do you get that education? And so, I mean, luckily there are 100 million financial benefits out there that organizations have. Not all great, but there are quite a few out there. The problem is engagement, right? 5 to 7% of employees engage with their financial benefits at their workplace.
Hmm.
10 minutes, maybe on average a year, checking your 401k plan.
Yeah.
So, you're really, not only you're not taking action there, but you're really not spending the time to really digest and understand what kind of impact you can make and even understand that you can, that's a possibility that you can change your investments and you can actually invest in a better future.
And that's one of the things that's been interesting as we look at, getting some of these options into more retirement plans is the kind of pitch to companies or organizations that this is a good way to engage your employees more because it makes it more interesting, compelling, purpose driven to think about your 401k or your 403b. And it's as it relates to, you know, climate, sustainability, environmental issues, social issues that people might care about more than checking their 401k for 10 minutes a year. So how
Yeah.
much of a factor is that in kind of the model and the work you do with clients?
Yeah, so it's a great like partnership with Kathryn's background and then my background to piece them together,
Hmm.
right? Because it's Kathryn like knows where someone's coming from an educational standpoint, and then we're trying to figure out how to make that education meaningful as people try to live what we call double bottom line lives, right? They're actually caring about their own financial health, but they also want to care about the environment, right? And so most people are living a double bottom line life like you do, George, right? Have adjusted their diet. They've adjusted how they use energy, right? They try to use mass transit more. They've made their home more insulated, and a lot of consumption behaviors, which
Hmm.
are great, right? And what society hasn't thought about enough, and hasn't been enough just public education, is financial decisions, right? That your financial decisions can be double bottom line, and double bottom line with quantitative benefits, right? What most people who've been thinking about double bottom line things in their lifetime has been stuff that's less quantifiable, right? It might be charitable giving when they want to help the environment or help social impact, right? Versus how they bank or how they invest or who they choose to use their insurance with. All of those financial decisions can also be made double bottom line,
Hmm.
right? And so where the connection is people care about their financial health for millennium,
Hmm.
right? People also care about their impact on things like their community, but the environment for millennium, right? But it's how do you actually pull those two together in a quantifiable and scalable way is the challenge we're trying to solve.
Yeah.
I
Well,
think we have a
especially
great solution to do that.
cool. And especially at this time, and you say these things have been going on for millennia, people have cared about these issues forever, but now we're at a very different time where we're in this sort of full world where they're really so integrated that if we don't care about these, the social and environmental impacts, the financial side of things will suffer. And so it's not just that sort of we want to do the right thing and make more money, but it's like we got to reduce risk and enhance returns by dealing with these issues. And so, as you say, the impact that these pools of finance or pools of capital can have is so big, and I think very much underappreciated. And maybe let's talk a little bit about that. So tell us how your technology kind of helps people see that, helps make it quantitative, and maybe particularly, not just at the individual level, but when we get up to the organizational level, and some of these companies or colleges have emission reduction targets in like their own operations and the energy they use and stuff, but also how these what we call financed emissions relate to those goals.
Yes, so I'll talk a little bit about it. So one is we actually borrow a word, right, that George, you put into our vocabulary through your work with the Intentional Endowment Network, right? So we've stolen some of your vocabulary, and I hope that's okay. But our,
Absolutely.
our mission is to help make organizations and employees intentional about their financial decisions,
Hmm.
right? And so we do that through classroom education, if that's the way people understand it. And we do it through technology learning journeys to start with the education. Did you understand the carbon footprint impact of your banking, investment, insurance choices? And we source research. We are very research based in everything we do, from Project Drawdown, from Waterloo University, from Harvard University, right, from Topo Finance. And we use that as baselines and say, on the impact side, as one example, every $1,000 that you have in a traditional investment, like an S&P 500 index fund or a traditional bank, right, like a global bank, versus if you put that into a green bank, like Amalgamated Bank or Walden Mutual Bank, or you put that into a climate solution investment, something that might be around clean energy, something around sustainable agriculture. Every $1,000 you move is as if you flew cross country one time less. So let's say you're worth $100,000 and you make that intentional decision to change your banking or to change your investments. You just saved the world 100 cross country flights per year. Now, and then by the way, your interest rate on those green banks is 3%. Probably better than you're getting with a traditional bank that you just don't think about it.
Hmm.
And so we try to bring that education forward on stage at conferences, right? When we're talking to prospects directly and through our technology so they can scale to all audiences and they can read it at the time they're ready to read it.
Hmm.
But to do that double bottom line, it's not just, hey, tax deferred savings, make sure you have banking to pay your bills, but intentionally understand and then act on the environmental impact of those choices.
I love it. And how does it look? I mean, tell us a little bit about, you mentioned these climate investments and climate banking, these types of things. What does that look like in the investment strategies that you're educating people about or organizations about? Is it just not investing in fossil fuel companies? Is it investing in companies with lower emissions? And how does that sort of like the emissions picture compare to what companies are doing to actually sort of shift the real economy in terms of like global emissions?
Yeah, so this is a very nuanced conversation, right?
Hmm.
But I try to keep it simple in two buckets. So one, call it socially responsible investing, has been a concept for millennium, right? But let's say at a scaled level through mutual funds for about 50 years,
Mhm.
right? The main approach for socially responsible investing has been divestment, right? So if it's a religious organization not wanting to invest in sin things, you just exclude those,
Mhm.
right? The same thing in the climate sector when climate-centric investments started, and I believe PAX funds, now known as impact funds, was the first financial asset manager to do this. It was also exclusionary, right? Don't invest in fossil fuels, don't invest in some of the browner industries like mining and manufacturing.
Mhm.
And so the good thing is that people could choose investments where they were not giving their money, right, to something that they didn't believe in. What's been learned over recent years, especially on the climate side, as the crisis gets worse, right, more and more research comes forward to see what else we can do to take action. And what's been learned in recent years is that divestment from brand industries has almost negligible impact on actually helping solve the climate problem, right? Whereas investing into climate solutions has massive impact, right? And so in climate solutions, right, this is where we talk about the climate finance gap. Let me just say one other thing around people listening to understand the magnitude, right? The world needs to spend about $8 trillion a year on climate solutions within the next 5 years to help solve the temperature rise and the continuous rise of greenhouse gas emissions, right? It's the three ways that you're going to solve the climate crisis is human choices, policy, and money. The money part is not understood well enough by society, right? And this is on a global scale. The world is currently spending about a quarter of that, just under 2 trillion of the 8 trillion that's needed, right? Trillions is the important thing to know.
Mhm.
Dan Chu and the Sierra Club Foundation are great where they have a movement called shifting trillions, right? Because when most people think, I want to help solve the climate crisis, like, that's great. I'm going to stand up this circular economy company and it's going to be $1 million of impact.
Right.
Like, that's amazing, right? But, and I want to promote people doing that, but everyone needs to understand that ambition needs to be a lot higher,
Mhm.
right? To actually tackle the problem. And it's $1 trillion emission or $1 trillion thing. And so, but every banking decision, every investment decision is incredibly meaningful to add up to those trends,
Mhm.
right? The world has $800 trillion on its balance sheet, right? That's a lot of source capital to just create a trillion.
Mhm.
People just need to understand its benefits and then actually make the choice.
Yeah.
And we believe there are clearly plenty of choices in banking and investing that are still double bottom line. You're not sacrificing financial returns. In fact, on the banking examples, they're better, right? On the investing side, they're equal or better, right? There are investments that are equal or better on the divestment pool and the investment pool.
Mhm.
We encourage people to do both, but understand that the investment is not enough, right?
Right.
The investment is a pathway to the investment into the solutions.
Mhm. Yeah, absolutely. And it's yeah, I'm curious, Catherine, on that sort of whole front, as you're talking to people or individuals are thinking about this, I feel like people do jump, Scott, as you said, to, I just don't want to invest in these things that I think are bad or that have bad impacts. Is that what you see? And is that a lot of what the conversation is helping kind of people see a more integrated picture on it? Or do people come with a desire to, sort of invest in the positive things or see how the companies in any sector can decarbonize and help shift the economy?
Yeah, I mean, a lot of it's context specific. I mean, we come from a large community of climate activists and or the climate community, I'll say, and
Mhm.
environmental minded people. So I think they're ready. They're like eager and ready to dive in and see solutions as the path forward. But I think, writ large, education, financial literacy, it's a steep learning curve. And so, yeah, I think looking at that, like kind of doing both and sort of moving the needle and showing people the pathway that the double bottom line can exist. It's not a choice between profit and purpose, that you can have both, and that with that, you're actually creating impact, sizable impact on these solutions.
Mhm. And how is it going so far? I mean, we've at the Intentional Endowments Network, we've been kind of looking at the retirements piece for a few years. We've seen a lot of barriers. There's regulatory things. The Department of Labor issues guidance, and that's sort of gone back and forth between presidential administrations. There's a real sort of fear of litigation in the space. It can be sort of a litigious part of the investment world, given that these pools of capital are, I think rightfully so, heavily regulated so that people's savings are well protected and the like, but that can make it hard for things to change. So, yeah, what are you seeing in terms of trends? What are you seeing in terms of barriers? How's the current political context affecting this, if at all? And yeah, how optimistic are you going forward for these pools of capital?
Each one of those questions can be like a 20-minute answer. All right, so let's talk about one thing you alluded to in the defined contribution market, the 401k, 403b, 457.
Hmm.
Right? It is a litigious market, and it's litigious in a litigious country, right, of the United States,
Hmm.
right? And it's a $12 trillion asset pool. Right? The history of the defined contribution market is very interesting, right? 30 years ago, when it really started taking traction and overcame pensions as like the default new thing to give to employees as a benefit, especially in the private sector, employees loved it, right? And employers loved it, right? But let's talk about just employees loved it because like, oh, I finally have choice, right? Just like I have with my financial advisor or my Schwab account or whatever, I have choice in what I can invest in. I'm being able to be very intentional on how I allocate my paycheck to the investments that my employer gives me, right? And then a few years into that, what started happening was there was training and education from all walks of life that said, what you should be doing with your defined contribution plan is set it and forget it. Set your payroll deduction and then let it ride, right? And so that's great for a single bottom line perspective. I'm getting tax deferred savings, right, in a diversified mutual fund or ETF. And I'm getting employer match, right? And if I have the wealth where I can maximize the tax deduction, I will. But the forget it part is the huge problem, right? And so what we're trying to do is teach people to set it and intentionally allocate it through speaking on stage, through classroom training, through technology, and understand why it's important. And here's some of the things that we provide, right? So through our technology platform, we actually have the emissions score, right, of every investment in the fund lineups that are available to employees. We have the sustainability leaders and the CEO and the marketing executives to actually understand from their net zero goals, right, around what is the actual materiality of the emissions from their current allocation across their 401k plan or their 403b plan in the case of university. And say, hey, if you want to achieve a net zero goal, this is actually huge, especially if you work in a knowledge sector like professional services, higher education, high tech,
Yeah. Let's
right?
just talk a little bit. Sorry to interrupt, but just before we go on, we've talked about this on other episodes, and I think a lot of people understand it, but a lot of people don't. Is just the carbon accounting piece. So
Yeah,
in carbon accounting, we've got scope one, scope two, and scope three emissions. Scope one are like all the direct emissions from an organization. Scope two are the emissions associated with purchased
yeah,
energy or activities. And then scope three is sort of all the indirect emissions, and there's different categories of them, and they include the emissions associated with investments or financed emissions. That's
yeah,
called category 15 in scope three.
yeah.
And just tell us how that is measured and how, yeah, your technology brings that into that overall carbon budget or carbon footprint for the organization.
Yeah, so two things. So one, and the way we talk about scope three, because scope three is greenhouse gas protocols, category 15 is very technical, right? For the non-technical listeners, influenced emissions versus like controlled, right? And so finance
Mhm.
emissions is a version of influence emissions where your choice influences the emissions that happen, right? So just that's our narrative to simplify it for the audience, right?
Yeah.
In the training as well as like the listening audience.
Mhm.
So if you think about uh, banking, to keep it simple, right? Because it's easier to understand, and then we'll move it into investments. Banking from savings and loan standpoint, right? Go back to It's a Wonderful Life, right? Like savings and loan, right? So people put deposits in, and then the bank lends it to something, right? And when It's a Wonderful Life, it rents it to real estate and mortgages, right? But banks lend monies to something, right? And so what they're lending the money to is the finance emissions of the bank's actions, right? Now take that for yourself, the same thing. If you bank somewhere where that bank is investing 100% of the money into climate solutions, right? Like While the mutual in the Northeast invests exclusively into the food system, especially sustainable agriculture. Atmos Financial exclusively into solar farms. Traditional banks and most super regionals, 1/4 to 1/3 of all of their loans go to a brown industry, right? Just because that's what they've been doing forever, right? And it may not even be like evil that they're doing it. It's just that's what they're doing, right? So you as a consumer have a choice to give your money to a bank that is actually using your deposits, of which you get some interest back for, where they control the lending where it goes to, by which choosing your bank. Now, if you go to investing, right, it's really important to think of, everyone thinks about stocks, right? But the investments have stocks and bonds and alternative investments, right? And cash, right? Half of the world's invested money that's in like the markets is actually in bonds, right? Most climate solutions are actually bonds, right? So people talk about blue bonds and green bonds. Like green bonds is investing in reforestation, creating peat moss farms again, sequestration on land. Blue bonds is saving the coral reefs, building the watershed, and making sure that the oceans are not being polluted, and actually like taking out greenhouse gases from the oceans, right? Bonds are very simple investment vehicles, right? It is also basically like a direct loan, right? So it is a direct, you can clearly say, hey, if I give my money to a blue bond that is directly helping save the oceans, I intuitively understand the environmental impact, right? We also model quantifying it for you, separate from intuitively understanding it, right? But I think the easier thing is like, what is intuitive? Just like divestment is intuitive. I don't want to give my money to a gun company. Just having a bond investment that is pro-environment is just intuitively understandable to people without doing all the math.
Right. That's loaning money to a company
Right.
that's driving a solution.
Right.
Yeah.
Versus now, let's say, hey, I'm invested in British Petroleum, and instead of investing in British Petroleum or ExxonMobil, I'm going to invest in Sunrun, right, or First Solar as a stock.
Mhm.
The math behind your impact there is actually not as direct, right? So you still might be doing better, right? You're also investing in a stock, which has more higher long-term returns. And the math is positive, but it's not direct,
Mhm.
right? It's not as if you're actually funding it. It's you modify what's called demand elasticity and cost of capital, but to simplify it, the impact is there is some, but it's not as direct. When you go back to the earlier conversation around where's the litigation, right, in the defined contribution space, most of it is around equity investments because that's what most people think about. But I'm going to go into a couple layers, right? 401k plans, it's up to the employer's job to provide safe and well-vetted investments options for their employees, right? Where they're not overpaying fees. It has a good investment return perspective. That's the main thing you're doing. But the other thing is that it's meant to be in the interest of the beneficiaries. This is called fiduciary law. You're supposed to be doing what is in the best interest of your employees, right? The demand signal from employees across the world, not just in the United States, but across the world at every age bracket, is steadily increasing on how much they want their employer to provide sustainability related things as part of their employment. Right. So the beneficiaries at the scale of more than 75% are saying, I want sustainable options given to provided by my employer around my financial wellness, of which the retirement plan is the largest piece. Right. But there's a history of litigation of the employer decision makers to be afraid of a lawsuit because somebody might have paid a slightly more amount of money on expense ratio than they thought they should have, typically on the equity side. Right. And so there needs to be a culture shift where I'll call it, for lack of a better phrase, brave employer leaders realize what they've been doing is actually not meeting the interests of their employees.
Mhm.
Right. And also using the math that exists that the financial returns and the environmental impact returns can go hand in hand, and think of like top and the right, there are choices that are both.
Mhm.
And bring those forward as a new thing. And it benefits the employer too. Because when you have a differentiated retirement plan, right, research from Energy Consulting, T. Rowe Price, and others, says that the profitability of your business is typically 2 to 3% higher because it's one of the factors that drives up employee satisfaction and performance and retention.
Mm-hmm.
Right now, most employers are literally what we say, they're burning money on their technology and their investment choices, like the fees they pay the third parties for the technology investment choices, where the employees don't even pay attention.
Mm-hmm.
Employers are burning $15 billion a year in the United States alone on solutions that the employers don't even notice.
Wow.
Why not use a solution that actually drives retention, employees are satisfied from, meets the needs of the beneficiary, and stop worrying about lawsuits that are outdated when actually people are getting sued today, employers on the West Coast, Google, Salesforce, and others, for not having enough double bottom line options.
Mm-hmm.
Right.
Yeah.
And so as people get more educated on the impact, more people are asking, I'm the beneficiary of this benefit. Can you give me what I need?
Yeah.
Yes, you should make sure it's fiduciary, like it's financially sound, but I also want the environmental impact too.
Yeah.
Give me both.
Well, people understand again, or increasingly understanding how integrated these things are. And if we're, maximizing returns for the next 10 years, but then in 20, 30 years when they retire, the world is unlivable and collapsing due to climate impacts. Like that's not in the beneficiary's best interest.
Yeah.
And so, obviously these things it's a complex system and it's not like investments alone. As you pointed out earlier, we need policy, we need all kinds of consumer changes. We need a lot to address this, but as you said, finance is a huge one. And yeah, I think reversing that kind of false narrative around fiduciary duty is really critical because I think it's a huge, gap or violation of fiduciary duty if people are not thinking about these or not being intentional about these issues and making these types of options available. So tell us a little more. Well, actually, Kathryn, let me go to you first in terms of as just given that demand. I think Scott, you said 75% on that survey, people see these things as important. What can individuals do? Should individuals do to actually push this at their own organizations or and how do you as Investature kind of help do that?
Yeah, I mean, some of the larger organizations, you'll see employee resource groups or like kind of um, affinity groups within organizations gather to start building a coalition to do this. I actually just a small case study of I've talked to a couple people as individuals have gone to their HR departments to ask for this, and kind of have continued the conversation, and they've sort of not brushed them off right away, but said, yeah, I'll look into it. But because a person of one, it's easy to sort of say, yeah, well, it's just for you. The rest of the organization doesn't want it. But once you start getting a groundswell of action and sort of critical mass of voices within an organization, you really can't ignore that. So I would say, that's one thing you can do is just sort of start a group within your employer and sort of research the options. Obviously reach out to Investature or other folks if you want to have a conversation and learn more about what some of those fund lineups might look like. What are the other options? Because I think a lot of it is just like knowing that they're not great. Target date funds are great, index funds are great for low fees, but again, that's set it and forget it. And not knowing where that money's invested and that it could actually be destroying the planet is not a good thing. And I think people are waking up. So that
Yeah.
would be sort of my biggest,
Do you guys
yeah.
actually, will you come in and provide resources and help people kind of understand the language or talk to their HR groups or whoever
Yeah,
the
we're
decision
doing it
makers?
now. We're meeting with some of the call it most sustainability minded technology companies and universities. We're actually meeting with their employee resource groups today to educate them on these options and help them see if they want it.
Yeah.
And then once they want it, then I said, here's how, help us have the conversation with your leadership.
Yeah.
The other thing though is we're not just like right now, we're not speaking just to like individual contributors, right? Anyone at an organization who views themselves as a leader, whether they're a leader in the org chart, right? Or they just view themselves as a leader, should like socialize. Hey, you know what? I've learned that I can have a double bottom line impact through our investment choices. What do you think? Let's go together, right? Or if you're a leader of people and you want your employees to be happy, right? You can talk to the employees that you manage and say, hey, if I can fight for this benefit for you, like, will this make you happier? Will this meet your needs and wants?
Hmm.
Anybody can start the dialogue. We're just trying to trigger the fact that you should have it,
Yeah.
right? And so you can be intentional about it. We're not saying every fund lineup should change, right? Actually, when we review some fund lineups from some of the largest employers in the country, some are pretty good at the fund lineup choices, but what's
Hmm.
missing is the intentional allocation, right? So there's a lot of double bottom line fund options that exist, but people aren't paying attention to it.
And that's
right?
just an education thing mostly?
It's an
Yeah.
education and action thing.
Yeah. Nice. And so will you, so you do go in and you'll say, do you recommend funds or that plan sponsors could consider to add?
Yeah, so we're an investment advisor, like we're SEC registered and FINRA licensed to give investment advice.
Hmm.
So we give investment advice to the employer. We try to speak at whoever is interested in listening, right? But we tend to try to speak at a higher level in the people leadership than what's called a plan sponsor, whose job it is to sort of manage the retirement plan.
Hmm.
And the reason is that their job is an important job, but also their job is one that is afraid of that litigation that you talked about in the past, and they're not thinking about, will the employees appreciate a differentiated retirement plan? They're
Right.
more thinking, I'm worried about the litigation. I'm just going to do what everybody else does. And so you just perpetuate a bad behavior.
Yep. And as you say, yeah, this is can be such a driver for productivity, employee satisfaction, and in any organization, that's the most valuable thing. So the CEO, the president is going to understand how important that is. And if this is something relatively easy they can do, that
Yeah.
it's an easy win.
Yeah. And what we find is that there's three types of investment choices that are most important and sort of where there's an opportunity for improvement,
Hmm.
right? So the target date funds, which is where your mix of cash, stocks, and equities changes as you age or you approach retirement. Those are a brilliant investment vehicle,
Hmm.
right? They're low cost, and for people who are intimidated by financial literacy, it gives them financial protection, but they don't have to think about it.
Yeah.
So all we do there is we say, hey, knowing that this makes sense for a lot of people, there are a couple, two or three, that are just distinctively better on double bottom line,
Hmm.
right? And they have the same fee structure. They just aren't marketed as well,
Hmm.
right? And so we just educate the employers about that, right? We don't say stop doing targeted funds. We think it's a brilliant investment vehicle for people who have low financial literacy. Right.
Hmm.
Second is bonds, right? So bonds, typically a 401k lineup or a 403 lineup has two or three fixed income options. Usually it's like a money market fund or a treasury and a corporate bond fund. That's it. It's very simple, right? Even though the oldest employees, the ones that have the most financial impact because they've been around the longest, right, are the ones that are most likely to invest in bonds. Because not a lot of attention is paid to it, they tend to be incredibly simplistic, right? And so all we say is, hey, instead of like a corporate bond fund or add a bond fund that is actually a blue-green bond fund,
Hmm.
it has the same risk, the same interest rates, but the environmental impact is extraordinarily good, right? And so because when people allocate intentionally to their non-treasury bills fund or their money market fund, they're just picking the other one because they want to have low risk, predictable fixed income.
Right.
Make it extraordinary for environmental impact and the same financial return. Like just actually think about it.
Hmm.
And then the last is that the hardest one that we do is a climate solutions sleeve, right? So
Okay.
this is where you like when you're talking about chief investment officers, this will almost be like an alternative investment, for lack of a better phrase,
Hmm.
right? Where it's exclusively selecting actively choice in climate solutions.
Hmm.
Sometimes even private, because a lot of climate solutions are not publicly traded,
Right. And
right? And
that's
so we only selectively offer those to like executives or employees that have a lot of wealthier employees, like a law firm, a managed
mhm.
consulting company, a university, a Silicon Valley company, where they have enough, they can take on the risk of
Right.
it being a non-publicly traded asset.
Hmm. And there are, in general, more options that kind of check all these boxes: low fees, strong returns, and environmental social impact. Where are there areas that they're still lacking, and sort of, do you have areas where you could use help in terms of offering what you see is needed for people in these plans?
Yeah, so I think there's two things. So one, I'll talk about on the investment side, and then Kathryn, I think on the financial wellness side, right, where there's a gap on like the education piece, where there's help needed. But on the investment piece, one of the things we talked about the climate finance gap before. It's at 8 trillion needed a year and just under 2 is spent. Most of the money being spent is on the energy sector and on what's called the mobility or transportation sector. So think of like the electrification of vehicles. Those sectors, like I don't want to have people stop changing behaviors, but from a finance standpoint, they're almost adequately financed enough. It's now just driving consumer behavior to actually buy them and use them. right? Consumer behavior or commercial or industrial behavior. The other 60% of the climate crisis is solved by things that are not that, right? It's solved by food systems, circular economy, nature-based solutions, and things that are around like the built environment and adaptation resilience, right? 60% of the solutions come from things that people can't invest in easily or art isn't talked about. People always talk about the energy transition,
Hmm.
right? The energy transition is huge, but it's actually like the technology's there. It's now just buying it,
Yeah.
right? And it's at a low cost, right? And we personally don't care that some of the technology doesn't come from the United States. Like we care about solving the global problem, right? So like use it, use the solar panels that come from another country. Where we need help is it's hard to invest in nature-based solutions or sustainable agriculture because there's not like a publicly traded bond or a publicly traded stock,
Hmm.
right? And right now it's a lot of small projects. And so it needs $6 trillion, but getting $6 trillion by adding up a lot of little millions will take forever.
Hmm.
Right. And so if anybody's out there in the financial sector or in the impact sector that wants to structure vehicles that we could have $12 trillion moved to, right? If there was a vehicle that they could move to, we would love to facilitate that.
Hmm. Nice. All right. Well, I'm sure there's someone out there working on it or willing to. What about just briefly, you mentioned the built environment. We just had an episode on the impact of real estate, and those assets. How about in that on that front? I mean, there's lots of real estate funds that do
Yeah.
go and plan lineups. Are there some that are sort of geared towards climate and sustainability that you know?
Yeah. So I actually say it's a gap in our knowledge.
Yeah.
And the built environment is very complicated.
Yeah.
Because our company the idea was formed a year ago and we founded it last summer, right?
Hmm.
There's only so much we can become an expert in, so the built environment, knowing like how to create concrete better and energy efficiency from a software standpoint, all that is great stuff. We just don't have acumen in it just yet.
Yeah.
But we know that we put in acumen around nature-based solutions, food systems,
Uh-huh.
because they are both adaptation resilience and they're hard to fund. And so we're trying to figure out how to fund things that one do adaptation resilience so that people who are already the most vulnerable are not being attacked more. And a lot of food systems and nature-based solutions can be co-located with the populations that are most vulnerable. And so we'd love to help save the people that are suffering from the delay in the world solving the climate crisis and give them solutions at the same time. And so we're constantly exploring that as how to do that.
Yeah. Nice. And Catherine, over to you on the education side.
Yeah, and I'll just add that I know Ceres has a responsible steel campaign, and I'm learning a little bit more about that just because I've got some folks over there, and that's in your backyard too.
Yeah.
But yeah, on the education front, I would just say I think the big piece that I t touched upon earlier is engagement, right? So we can educate, we can provide a lot of information, and as I said, there are actually quite a bit. It's a flooded market of financial wellness programs and platforms and educational materials. Some of them are actually free, right? So it's the question is how do you meet people where they're at? How do you engage them? How do you bring them back? How do you activate them to make change? And then also to spread the word, right? Because it's kind of you want to create that ripple effect and have a broader impact, not just one by one, but systemically. So we're really looking into new tools to do that. I mean, there's obviously ways you can do that through personalization and gamification, coaching, webinars, things like that.
Hmm.
But I think there are some new players, looking at things like text messaging and just other ways to sort of reach people on a personal level.
Yeah.
AI obviously is in the mix because that can really help scale that
Yeah.
personalization piece, right? We're still, visioning, but yeah, we've got all those kind of tools in the mix.
And
Nice.
I'll just add one thing just to put some perspective on it for listeners. So the average American spends about 5 hours a day, either like blindly watching television or like looking at social media, right?
Hmm.
Uh, we think if you spend 10 to 15 hours just with a little bit of intention, like once, right? And maybe revisit it every couple of years, right? You could change your banking or be intentional about your banking, right? And be
Hmm.
intentional about your investments. Just like think about that perspective. Like, hey, I'm like watching this reality TV show. I'm scrolling social media. Like, is it making me happy?
Right.
right? Versus like, here's just something else you could do that might take 10 to 15 hours of your time like once, and it'll make you happy. You'll realize you have an impact,
Hmm.
right? And just do it,
Yeah.
right? And so we're trying to figure out how to like get people away from like this zombie lifestyle of just this is what I do through technology, through being on platforms like this to like drive people to take an action that
Hmm.
we think will actually make them happy.
Yeah. It's so
Instead of
satisfying.
doing so many things that are like not making them happy, it's just like a habit.
Yep. And it's so satisfying to know you can have that much impact. And it's not like 10 to 15 hours all at once. I mean, this you can take this in bite-sized chunks.
Yeah.
And Catherine, you mentioned people can reach out to you, but how does it like look if say there's a faculty member is listening to this at a college and is like, I really want to take this on. I've been meaning to do this. Should they just contact you on LinkedIn? Do you guys have tools on the website? Like, how does that actual engagement look?
Yeah, it's a great question. I mean, certainly find me on LinkedIn, find Scott. We do have a website, investiture.com with an A, I should add, invest in nature. And there's a contact us page, so you can fill that out. It comes to us, we will respond. And yeah, we'd absolutely love to have a conversation. We're already talking to quite a bit of faculty members, administrators, folks in sustainability schools, interested in partnering, the idea of a capstone project, business schools, things like that. There's a lot of interest.
Nice. Yeah, and we've been, as you know, we're looking forward to working with you all through the Intentional Endowments Network too. We've had conversations around this and put out some resources to help faculty kind of drive these conversations forward. But as you've alluded to, it's like it takes persistence and resources and education, and everybody's busy. So yeah, we're really excited to see how we can partner. And we've seen some campaigns work really well, and faculty members pulling together petitions and getting those to their organizations, and leading to real change. But yeah, there's a lot of opportunity to do more out there. So very excited that you guys are doing it and tackling it in such a cool and sophisticated way. And unless we've missed anything that you guys wanted to touch on before we wrap up, I've got our sort of two standard final questions that we can jump into.
I just want to say eventually we've borrowed intentional, right, from Intentional Endowment Network. Hopefully one of these months we'll say something that you'll start borrowing too. So, we'll pay it forward.
Absolutely. Well, you guys are doing a ton of cool stuff that we're going to borrow and promote. So I appreciate it. And so this is one, we're podcast is the future of finance, given all this work that you're doing and the shifts and the impact of finance that you've talked about. If we're to be successful in driving these types of changes, what does that look like to you? What's your vision for the future of finance?
Yeah, it's honestly really simple, right? Is to remind people that your money is your power and money moves the world, right? And that can apply to double bottom line, mission-oriented decisions too,
Hmm.
right? And to stop, don't forget that. Like somehow people think when you're trying to solve an environmental problem, it's different, right? But no, money moves the world. Money is your power, right?
Yeah.
Voting is your power as well. Vote too and vote for these things. But like, it's that simple. We're
Yeah.
just trying to help you remind you that the impact is so large as if you don't do it, how much pollution you're doing when you're not even paying attention to it. 1/4 to 1/3 of your money is polluting the world actively while you're not paying attention. And instead, you can actually help save the environment instead of unconsciously polluting it.
Absolutely. And it's huge, and it is invisible in a lot of ways and people don't think about it. So it can escape your mind. But yeah, these types of reminders are great. And as you say, you can do it all the time. You don't have to wait every 2 to 4 years to vote. Catherine, how about you?
Yeah, actually, it's a great segue because in my previous career, I spent most of my time with people under 18.
Hmm.
And especially in the environmental education space, they were getting very frustrated and anxious and like, what could I do? And that's exactly what I said. I said, you can't vote in elections, but you can vote with your feet, you can vote with your money. And you look at advertising budgets, they're so targeted towards kids, right? They move the world in terms of how their spending power and where they put their time and their energy and their money.
Yeah.
They may not have big pocketbooks to invest the way we're talking about with 401k and 403b plans, but they do have choices every day that they can make. And it's incredibly important. And so I like to kind of give that message that it's not just about, folks in late retirement that's starting to think about this, which, Bill McKibben and others have done a great job moving that needle. And I'm so appreciative of that work, but it really starts at any age.
Yeah. And even if they don't have their retirement plans yet, they will. And so they can start getting educated and excited about what they can do when they start getting those first withdrawals held from their paycheck to go.
Well, and they can ask their parents and their grandparents, what are they
Yeah,
doing?
great point. Kathryn, sticking with you and sticking with young people. So what about those folks that actually want to work in this sector or kind of have this type of impact as part of their career? What advice would you give them to get ready for that?
Yeah, well, one thing that's exciting in the field of education is, while it might be scary, it's really getting disrupted, right? We're seeing higher education having some sort of tectonic shifts around, types of courses, and a lot of these, like, MIT started with the MOOCs, and now there are these sort of 12-week boot camp fellowships, like Scott and I went through with Climate Base. So I would just say, sink in, learn. There's so many resources free. Um, Sustainable Investment Forum has a conference in June. They have a fellowship, fully expenses paid for a college student. Some of these things are hard to find, but they're out there, and so the knowledge is great and it's accessible. And so I think that's sort of the first step. And then, as we said, just like every day, be intentional. Think about the choices you're making, small or big. I mean, we're talking at very like, seismic levels about the type of work we want to do with trillions of dollars, but it really does take everyday action to really solve this problem.
And
Yeah.
just to pull on that, like basic cliches, actions speak louder than words, right?
Hmm.
Start taking action, right? And continue to take those actions, right? People can take action. You don't need to wait for your 2-year course to end before you take action, right? Take action the entire way. And then for people who, one thing that I find when Kath and I both talk to a lot of people who've had a career in sustainability or they moved into sustainability, 80%-ish are working on reporting, right? Or like consulting about reporting,
Hmm.
right? But they got into it to actually help the climate transition or the environmental transition. Always remember, like, you got into it to actually create the change and the change. Constantly drive for the change, not just reporting the current state.
Yep. Yep. I love it. Perfect. Well, Scott, Kathryn, thank you both again for taking the time and for all the work you're doing. It's great to see you and looking forward to continuing to work together.
It's been
Thank you.
great to be with you. Thanks.
You bet. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.